Okay, switching to a little bit of a base metals flavour now. Our next speaker is André Labuschagne, Executive Chairman of Aeris Resources. André is an experienced mining executive with a career spanning more than 30 years, primarily in the gold industry. He's held various executive roles across South Africa, PNG, Fiji, and Australia for a number of leading gold companies, including Emperor, DRD Gold, and Anglo Gold Ashanti. Prior to Aeris, André was Managing Director of ASX-listed gold company Norton Goldfields, operating near here, prior to its sale to Zijin Mining in 2012. Thank you, André. Over to you.
Thank you, Duncan, and thank you everyone for the opportunity to present Aeris Resources again. Talking about it earlier, I think it's probably year 10 or 11. I guess this year we'd like to just take a step back. The last 3 years has been, every time I was here, it's like we're working towards an improvement. And then in 24, when we put the Jaguar mine in care and maintenance, was the restart of working ourselves back up. And 25 was a better year than 24. And you'll see through the presentation that 26, again, look a lot better, but also setting 27 up as a significant better year for Aeris. And really the focus for today will be the strategy for the next 12 months on the assets in Aeris. As you might know, so we got the Tritton copper mine in New South Wales. This year Tritton will really step up production by about 38%, and we'll talk a bit more on that. Looking at production of around 24 to 29,000 tonnes of copper metal and about 8,000 ounces of gold on top. We've got the Cracow gold mine. That mine will do about around 40,000 ounces. And you can see there between the two production, the guidance sits around 40 to 49,000 copper equivalent production, which is roughly around, for the gold mine, it's around 130,000 ounces of gold on an annualized basis. On the project side, we got the North Queensland assets. We'll talk in a bit more detail, but we're planning to sell those. And the Jaguar copper zinc mine, which, as I said earlier, was put in care and maintenance around 2 years ago, and we worked up now a clear plan on what we're doing with Jag. And then the Stockman project is a well-advanced project in Victoria, which we'll go through. So clearly, we're an operator, got good projects. This year, the real focus is going to be on operational delivery. So a lot of work's going into Tritton and Cracow. And really, the step change for Tritton is the execution of the Murrawombie pit. Historically, every time when Tritton do around 30,000 ounces, tonnes of copper, is when we have a good solid base load of about 1 million tonnes feeding a 1.8 million tonne capacity process plant. Now, historically, that was a Tritton underground mine, which would typically do 1 million tonnes, and then you add few other small undergrounds to it and you get your tonnes. Now the Murrawombie pit, we already done stage 1. Those tonnes has just gone through finally in July, and we're busy doing the pre-strip for stage 2. That will take about 5 to 6 months, and you'll see in the slides coming up what that will do to the production profile. The clear change and strategic delivery of the Constellation deposit is really the game changer for Tritton, where this was discovered about 5 years ago. We're planning to go from the Murrawombie pit to the Constellation pit and start the production of Constellation basically as we move forward in 27, 28. The big focus for this year, we've doubled the exploration budget across the business, is about resource extensions. Historically, we've just drilled enough ahead of ourselves for the next year or two. We're putting a big effort in to put a real organic growth opportunity for all the resource extensions that you'll see when we talk about Tritton. What's the plan? At Cracow, and I was talking to a shareholder the other day who's been in for a while, and we were actually supposed to do the rehabilitation of the Cracow mine this year. Would have been done. We bought it 5 years ago from Evolution. We thought there's 2 years. We know there's 2 years of reserves. We thought there's 4 years. Today we got exactly the same view and the potential for a real upside. And we'll talk about that. And once again, it is about what's the organic opportunities for Cracow. We made the clear decision that we want to focus our operational focus on longer life, strong resource, bigger mines. And our North Queensland assets, we had the Mount Colin copper mine. It was a small 8,000-ton copper mine, all treated through Ernest Henry. When we bought those assets, capital was spent, so it was all about just making cash. It is small assets, and we decided to simplify the business and to get a clear path forward, we will sell those North Queensland assets. And we're busy with the final stage of that sale process. On JAG, we've put in care and maintenance with a view to restart. One of the clear things which come around is we are not going to restart JAG on the same basis of what we had before, a 5 or 6 year life of mine plan. When you do those, people expect you to close again. We are going to drop the care and maintenance costs from about $2 million a quarter to $600,000 a quarter and take that money. There's 8 really good exploration targets for base metals. Drill it out and start this mine back up with a 10+ year mine life. Now, the drilling of that will be done in this financial year, and we'll see where that takes us. There's also exceptional gold exploration opportunity. Now, that is a base metal mine. The gold you'll see in the slides coming up, that is one of the things we will be looking for. Either you put it in a JV or you drill it yourself, but there's high potential upside on the gold for JAG. At Stockman, it is a 12-year reserve life project of copper equivalent grades of over 3.7% copper. There's the final stages. We're doing an Albion process test work. Once that's done in the next 3 months, we will update this study, but we will then start to look at strategic partners to come in to help develop that project further. On the growth side, greenfields exploration and organic growth, or brownfields exploration or resource extensions at the operations is a clear focus. We always look for opportunities. We always look for opportunities in the Tritton region. It is a large plant. You want to create significant life, so we always look for growth opportunities outside of our current assets, as we've done for the last 7 years. On the balance sheet, we got $40 million of debt currently in place, payable in August, and you'll see when I talk you through the guidance, clearly if we achieve those numbers, we will repay that debt from cash flow and reset the balance sheet as we move forward. On the guidance, compared to FY25, production is going up. Tritton is going from 19,000 tonnes in FY25 to 24,000 to 29,000 tonnes in FY26, and it is on the back of the open pit, but also the really good grades we're getting out of Avoca Tank of over 2% copper. On the gold side, it's going slightly down. It's not material, it's small, going between 44 and 56, and everything else, you'll see there's more growth capital, lower sustaining capital, more growth. That is all about the pre-strip. It's about $50 million in the next 6 months, which will go into the pre-strip of the Mara pit. Starting the year off with a good balance of cash and receivables, but clearly that exploration budget was last year was about 10. This year it's around $20 million, which we'll put into the exploration. I'll just touch on Tritton. So Tritton, large tenement package, typically we'll mine 2 or 3 mines, feed the 1.8 million tonne process plant. As I said earlier, production guidance up by about 30% year on year. And we clearly see the benefits of the capital investments we made over the last 2 or 3 years with Avoca Tank, Budgerigar and Mara Pit is starting to pay off in FY26, 27. There you can see the operational performance, really a nice step up for Tritton, and that whole process and Constellation then flows off from the Murrawombie pit production as we move forward into 27. This is why we believe 26 and 27 will be a strong financial years. You can see there, the line is the pit, the plant capacity. From January, we will deliver significant tonnes in the final stage of Murrawombie pit. So 900,000 tonnes will basically flow over into FY27. And in FY27, we'll start the capital works and development of the Constellation pit, which will then deliver the next 4 or 5 years of open pit mining. So for the next, let's call it 5 years, Tritton will have significant tons from the open pit, and then really it's about the extension of the current undergrounds, and you can see there the meters which we've planned to drill at Tritton. I can't remember in the last 10 years that we've drilled 80,000 meters at Tritton to really look at all these potential extensions. So just to put it in a bit of context, that's the start of the whole Tritton mine. Currently that's 1.3 kilometers deep, and we're still mining and we're getting really good intersections there. The south wing, Budgigar, is one of the mines we're currently mining, and Avoca Tank, although it's small, it is delivering 2 to 3% copper and make a big difference. So clearly the focus for us is drilling the extensions of those three deposits. We will drill Avoca Tank. We're actually busy drilling it because in our current plan, the last 3 months of the year doesn't have any Avoca Tank. We already drilled the hole 400 meters below Avoca Tank and intersected mineralization, so we know it's there. And you can see all these ore bodies remains open at depth. You need to put the money in. And that's the clear plan and focus for FY26 for Tritton. When you look at Krakow, Krakow is a very neat, tidy little operation. Shouldn't call it little, it still produces good copper. A 600,000 ton process facility. You can see there, since we acquired it from Evolution, we've increased the resource. We spent quite a bit of money in resource extension. It is settled around that 40 to 50,000 ounces of gold annually. And at that sort of level, everyone knows what's the gold price. It does generate good cash, which then enable us to put more exploration dollars into this, but also to execute on the copper strategy at Tritton as we grow Tritton to that 30,000 ton producer. There you can see that it's settling around that sort of 40 to 50,000 ounces, and clearly for us it's about what's next. So currently all the production is coming out of that Western Vein field. The two really good opportunities for greenfields exploration is sitting in this Southern Vein field and the Western Frontier. So this year we will test those. It's under about 300 to 400 meters of cover, but when you talk to Brad, our head of geology, that is where he believes you can find the next Western Vein field. One of the real exciting opportunities, and actually talking to Simon who worked at Krakow earlier, there was this open pit over the Golden Plateau operation. This is historical mining in the 1930s, mining 10 gram a ton, and you can see all the grey areas. That's old stopes, but you can see there the grade control drilling sitting down with those intersections. What we're working on is to put a bigger open cut mine over this and then mine it. There was an open pit mine doing about 2.5 million tons at 2.7 gram a ton. That's the historical result. And this is an exciting opportunity where you can actually get Krakow, where you normally only have 2 years in reserves and only have a 2-year life you can talk about, there's a potential for a really large target of around 200 to 400,000 ounces of gold sitting in this potential deposit. So the work has been done within the next 2 to 3 months. We'll know, and if this works out, the material life for Krakow will change significantly to a much more defined, longer life as we move forward. I'll just touch on Krakow. You can see those targets. As I said earlier, we're going to drop the cost, we're going to drill it out, and those 8 targets will be tested this year to really create that life where you can have a sustainable business, where you can spend money and create the life and returns you're looking for from JAG. The other opportunity you can see there, it sits Thunderbox to the north, King of the Hills to the south. These are all gold exploration targets. Now, you can see Great Western, Wonder Underground is literally, I think, 8 to 15 kilometers away from some of these targets. We will start to look at, are we spending money ourselves or are we putting in a JV? Because we believe, although it's a base metal mine, if you find gold there, obviously the gold miners will be very interested to talk to us about that as an opportunity. At Stockman, As I said earlier, we're doing the Albion process test work, which looks very successful. We've been approached by the Victorian government on the sulfuric acid flow sheet because 50% of that ore body is pyrite. As another product, we're busy doing scoping studies on that and flow sheet designs. And within the next 3 months, we'll have those results. And then we'll start to look at a partner to come in to take this project to the next level. Really, at the end of the day, production is stepped up significantly year on year. The business is well set for growth. We're spending a lot more money on exploration and getting that resource base stronger. And as I said, we're always looking for opportunities to grow within and outside of the business to really create shareholder value as we move forward. Thank you very much.
Thanks very much, André. We're just on time, so we'll keep pushing on.